Have you ever looked at one of those huge global corporations and just wondered what is actually going on inside? Well, today, we're pulling back the curtain on one of the most powerful tools in finance, consolidated financial statements. This is how you see the real story behind a corporate giant.
So let's kick things off with a bit of a riddle. You see a massive brand. You know the name, you see the logo everywhere, and you naturally think of it as one big thing. But the truth is, behind that single name, there's often this complex, tangled web of legally separate companies. So how do we make any sense of that?
All right, let's use a really simple analogy. Think about a family. The parent has their own bank account, and the child has a piggy bank. Now, legally, those are two separate pots of money. But if the parent has the final say on how all that money gets spent, then from an economic standpoint, it's really just one big family fund, right? Well, it's the same in business. We call this a group. The parent company controls the subsidiary, and together they act as one single economic force.
And that is exactly where the consolidated financial statement comes into play. It's like a financial X-ray. It lets us see right through all those separate legal walls and look at the real, combined financial health of the entire group, all in one clear picture.
So here's our game plan for today. We're going to talk about what makes up a group, define the key players, get a handle on the crucial idea of control, run through the rule book and its exceptions, and then finally, see how it all comes together to show us that big picture.
All right, first things first. In this corporate family we're talking about, there are two main characters. First up, you've got the parent. Pretty straightforward. This is the company that's in the driver's seat. It's the one pulling the strings and calling the shots for the other companies it oversees. And on the other side, you have the subsidiary. This is the company that's being controlled by the parent. It's still its own separate legal business, sure, but it operates under the parent's direction. So, this leads to the most important question of all. How do we know who's a parent and who's a subsidiary? Well, it all boils down to one single powerful concept: control. This is the absolute key to everything. And I want you to really notice that word soul. This is so important. It's not just about owning more than 50% of the shares. That's a common misconception. The only thing that truly matters is whether one company has genuine, decisive control over another. So what does control actually mean in practice? Well, the official definition is kind of like a three-legged stool. You need all three legs for it to work. First, you need power, the real ability to direct the important activities. Second, you need exposure to returns. You've got skin in the game. Your fortunes rise and fall with the subsidiary. And third, you need the ability to use your power to actually influence those returns. If even one of those is missing, you don't have control. Simple as that. Okay, so let's get into the rule book. Once we've established that, yes, control exists, the next steps are actually very clear-cut. The rule is simple, and it is absolute. If you are a parent company, you must prepare consolidated financial statements. This isn't a nice-to-have or a suggestion, it's a core principle of financial reporting. Think about it. Without this rule, companies could just hide their unprofitable or risky businesses off in separate legal pockets, and investors would never know the true state of affairs. Now, like any good rule, there are a few very specific, very narrow exceptions. This isn't a bunch of loopholes. These are just logical situations where consolidation wouldn't really make sense. But first, let's just squash some common excuses you might hear. A company can't just say, oh, we're not going to consolidate this subsidiary because it's losing a ton of money. Or, well, its business is totally different from ours. Nope, none of that flies. If you control it, its results, the good, the bad, and the ugly, are part of your group's story. Period. So what are the legitimate reasons to not consolidate? There are really only two big ones. The first is if the subsidiary is held for resale. Basically, you bought the company with the sole intention of flipping it quickly for a profit, not running it for the long term. The second reason is materiality. If a multi-billion-dollar corporation buys a tiny little local shop, the shop's finances are like a single drop of water in an ocean. Including them wouldn't change the big picture for investors, so it's considered immaterial. And there's one last interesting little scenario. What happens if a parent company is also a subsidiary of an even bigger company? Kind of like a middle manager. Well, that middle manager company might get a pass on preparing its own consolidated report, but only if its own parent, the big boss at the very top of the food chain, is already publishing a public report that includes everyone.
So this brings us right back to where we started. It reminds us of the whole point of this entire exercise. Why do we go through all this work? The goal is really simple. It's about transparency. It's about presenting the group as it truly is, one single economic unit. Consolidation puts all the cards on the table. It shows every single resource the group controls, every debt it owes, and the bottom line results it achieves with everything it has. It's the only way to get a true and fair view of what's going on.
So let's just trace that path one last time. It all begins with defining the parent-subsidiary relationship based on control. That forces us to see them as one economic entity. And from there, we apply the strict rules of consolidation while still allowing for a few logical exceptions. See? It's a complete, airtight framework from start to finish.
So, consolidation gives us this amazing, powerful, wide-angle lens to see a corporate group's unified strength. But by combining everything into one big number, it makes you wonder. So here's a final question to think about. In showing us the whole forest, what important details about the individual trees might we no longer be able to see?